Welcome to episode 23 of the 5-Minute Investor Podcast, where Stockhouse columnists Jon Brown and me, Trevor Abes, each deliver a 2.5-minute stock profile related to recent news stories with investment implications. This week, we're analyzing stocks to ramp up your portfolio's defenses against economic uncertainty, thanks to their underlying companies' strong operations and leadership roles in essential industries. John, what stock do you think listeners should look deeper into when it comes to reinforcing their investments?
Trevor, this stock came to my attention after reading a recent survey from Broadridge Investor. And what they found was that 80% of Canadians are prioritizing homegrown or domestic investments. And nearly half of Gen Z, yes, I said Gen Z, and millennial investors plan to adjust their portfolios in the next 6 months. And what they're seeking is resilience and reliability. That's where I came to find Magellan Aerospace Corporation. That's a Canadian industrial company that trades in the TSX with the symbol MAL and a market cap of $973 million Canadian. Working out of Mississauga, Magellan designs and manufactures critical aerospace components for defense, space, and commercial aviation markets across North America and Europe. What makes Magellan stand out? It's a defensive stock. That means its demand remains relatively stable even during economic downturns. With a beta of just 0.63, Magellan stock is less volatile than the broader market. And the numbers speak for themselves. Volumes even. Magellan has delivered a year-to-date return of over 88%, outperforming the TSX composite by nearly eightfold. Its 5-year return exceeds 196%. That makes it a compelling choice for long-term investors seeking shelter from market storms. Analysts project continued earnings growth, with this fiscal year estimates at 98 cents a share and a price target averaging $18. That suggests stable investor confidence to me. In a time when volatility is the norm, Magellan Aerospace is offering something a little more rare: consistency, performance, and Canadian resilience. So for any traders looking to fortify their portfolios, Magellan may be the defensive anchor they've been searching for. Again, that's Magellan Aerospace Corporation, trading on the TSX with the symbol MAL. Now, this is just one of two to talk about.
Trevor, you've got a stock to tell us about that's basically the other side of the same coin, isn't it?
Yeah, John, my chosen stock today is ATS Corp, ticker ATS on the TSX, a top automation solutions provider to the world's most successful companies, with operations spanning more than 65 manufacturing facilities and over 85 offices in North America, Europe, Asia, and Oceania. The company has generated positive net income since 2015, complemented by a 4.5x jump in revenue from $591 million in fiscal 2013 to $2.7 billion adjusted in fiscal 2025. This profitable growth trend continued in Q1 2026, with revenue of $736.7 million and net income of $24.3 million, with management confident in ATS's ability to deliver increased profits and market share, regardless of how tariffs play out, U.S. tariffs that is, for two main reasons. One, the majority of the company's shipments from Canada into the U.S. comply with the U.S.-Mexico-Canada trade agreement. And two, equipment and product adjusted revenues from its Canadian and European operations being sold into the U.S. remained consistent at just over 20% since Q4 fiscal 2025. From a broader perspective, management expects to be shielded from short-term economic uncertainty thanks to rising demand for its automation solutions to counteract labor shortages, higher labor costs, production onshoring or reshoring, and the ever-pressing cross-industrial need for more efficient production to remain competitive in the marketplace. With the global industrial automation market estimated to grow from $206 billion in 2024 to $378 billion in 2030, that's US dollars, posting a robust 10.8% compound annual growth rate, ATS undoubtedly has a seat at the table when it comes to increasing industrial efficiency and enhancing client margins, which is the definition of an evergreen value proposition. At the time of writing, ATS stock has added more than 120% since 2020 and about 200% since 2015. As always, you can find links to the articles from today's episode in the show notes, and you can find more investing insights on Stockhouse and the market online. The 5-Minute Investor is on Spotify, YouTube, iHeartRadio, Podbean, Stockhouse, or wherever finer podcasts are found. Thanks for listening, and we'll see you on Monday. This podcast has been prepared as part of a partnership with Magellan Aerospace Corporation and ATS Corporation and is intended for informational purposes only. For full disclaimer information, please visit themarketonline.ca/disclaimer.